Yes, your boy Crypto Blood, and welcome to another episode of My 2 Cents. This morning we're looking at gold. Yeah, it's ghosting us. It looks like hundreds of billions of dollars worth of gold, and actually cash as well. It's unaccounted for. And this is out of Goldman Sachs. They have a new report. They've been tracking this, and they've reported since 2016 things have been looking a little weird. Shifty shift, maybe still in all of our gold. I don't know. We're going to take a look at it. Very interesting. I have my take on it. I think personally it's just negative interest rates. People are probably hoarding gold in cash in vaults. I think this article kind of talked about that. So we're going to take a look at the details on that here in a second. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. Let's first look at the gold market, how it closed on Friday. We've got COMEX futures February contracts looking pretty much unch. It's down $1. It looks like 1.2 right now as futures are trading before the market opens. But I mean, as you can tell here, it's been a downtrend ever since September of this year. Now, unfortunately, this is what we have to rely on when it comes to pricing gold. I personally think that this market is very manipulated. It's been proven. It's been settled in court, actually. JP Morgan lost a case regarding silver manipulation. And, I actually had the guy who won that case on my channel. If you guys missed that, Ted Seidel, check that interview out if you want. But, this is all we have to rely on at the moment. But what's interesting is that, Goldman Sachs is saying that millennials, which is my group, should be looking at gold. But instead, we're looking at Bitcoin. We're putting our faith in Bitcoin. And I don't know if you ever saw this video, this commercial from Grayscale Bitcoin Trust. But let's take a look at this really quickly, and I'll get your opinion on that in the comments below.
Right. Thank you for that, Bob. But I think it's time we go with GBTC. It's Bitcoin exposure through a traditional investment account. Nice rock.
It's time to drop gold. Go digital. Go Grayscale.
That was funny. The Grayscale Drop Gold campaign. That was just one of a few videos that I've seen. Is it working? Possibly. I mean, you got to look, different generation. We're more digital. And, Bitcoin is something that is scarce, more scarce than gold, because we know there's a finite supply. So it does look like the millennials are leaning toward the digital form of gold, Bitcoin, as of right now. But Goldman Sachs is saying that they should be looking at gold, which I have to have some level of suspicion when I hear anything Goldman Sachs tells us to do. Do we listen to Goldman Sachs in this case, or do we do the opposite? I told you guys on many occasions on this channel, I tend to look at doing the opposite of whatever the mainstream media, Wall Street complex, whatever they're talking about doing, I'm probably doing the opposite. But it says for millennials, according to the latest data from Charles Schwab, the Grayscale Bitcoin Trust is the 5th largest holding in retirement accounts, including 401ks, with almost 2% of their assets tied to the success or failure of the largest cryptocurrency, which is pretty interesting. Now, I will say Bitcoin is much more volatile than gold, but what I'm banking on and what many millennials are banking on is that when things hit the fan and we see some type of shakeup in the traditional markets, we will see Bitcoin go hyperbolic. And so far, so good. If we look at returns, if you chart returns of Bitcoin versus gold, there's no competition there. Bitcoin has outperformed actually every asset class, not just gold, in the last 10 years. Is that an anomaly? I don't know. I can't say. 10 years is a very short time period, but the technology is there. And, with its scarcity, and we have on-ramps now with a lot of the Wall Street custodial accounts, it is a strong possibility more than ever that it's here to stay. I remember when I got into Bitcoin in 2013, it was definitely something that was experimental, and a lot of naysayers, again, me being a contrarian, I listen and do the opposite of whatever mainstream media is saying. 2013, CNBC didn't even talk about Bitcoin at that point. 2014, really, that's when we started to hear the narrative in the mainstream media. Fox Business News, mostly CNBC. Bloomberg didn't really touch it that much, but they were bashing Bitcoin, bashing it. And if many of you would have not listened to them, you would be in a very, very good position, even at $6,000 Bitcoin. But it says that Goldman Sachs suggests that millennials' willingness to accept ever-increasing central planning means gold is the go-to asset to preserve wealth over long-term horizons. And at least in the short term, gold has held its value relative to Bitcoin as the world's volume of negative yielding assets has shrunk on the latest round of optimism that this time is different. Indeed, Goldman Sachs notes that gold looks attractive, particularly relative to DM bonds. Both bonds and gold are defensive assets, which go up in value when fear spikes. Exhibit 5 shows that investment in central bank demand for gold has been highly correlated with U.S. 10-year notes. Goldman Sachs says during the next recession, gold may offer better diversification value to bonds because the latter may be capped by the lower bound in rates, limiting their ability to appreciate materially. I can agree with that, but I don't think gold is going to outperform Bitcoin in this next recession. But we don't know. This is a huge guess from me. And, have some gold. Sure. I'm not saying don't have gold. I'm just saying if you want to see, in my opinion, a more aggressive return, you're probably going to see that in Bitcoin. Now, this is a huge probably because we just don't know. We've never had Bitcoin in a recession. So the next recession will be the first time we've had a new asset class that's not owned by anyone in a market. So we'll have to see how this pans out. But my gut feeling is telling me that it will do outstanding. But more focus on the subject at hand, which is gold, and it disappearing from many of the balance sheets that are tracked on Wall Street and across the globe. Goldman Sachs has a new report that says that something strange is going on at the same time that central banks are injecting $100 billion each month in electric money to crush volatility and ramp markets. A similar amount in hard physical currency and precious metals are literally disappearing. So take gold, as they reported, Goldman Sachs that is, laid out the case for gold, saying that gold's strategic case still is strong. One reason for this is that the same central banks that are full tilt printing cash have also been splurging on gold. And as a result of the geopolitical uncertainty, there has been a record surge in gold demand by central banks themselves. As Goldman Sachs notes, central banks globally have been buying gold at a very strong pace, and in 2019 looks to be a record year for central bank gold purchases, with targets around 750 tons combined purchases likely to be met. So here's a graph or bar chart that shows central bank purchases looking to reach record highs. They say due to geopolitical tensions. I say it's more so because of central bank tensions. Them printing massive amounts of money can only hurt the situation for cash versus precious metals, especially if you have countries in Europe going negative interest rates. You're definitely going to see more people hoarding gold in vaults versus actually having them held in central bank accounts. But it says another bizarre event is going on here, something that caught Goldman Sachs' eye, which according to them, there has been a whopping 1,200 tons or 57 billion of unexplained gold flows in just the last 3 years. As a Goldman Sachs analyst wrote, rising political risk together with negative European rates may be an important reason behind the large share of unaccounted gold investment over the past several years. Cumulative unexplained gold demand based on World Gold Council post-2010 and GFMS pre-2010 balance data is surged since 2016. Similar dynamics can be seen when we look at implied vaulted gold stocks built in the UK and Switzerland, which is calculated as implied cumulative total net imports minus transparent ETF gold stock. So in other words, Goldman points out that just over the past 3 years, there have been tens of billions in gold flows, which have mysteriously and inexplicably disappeared from the official record, yet which are most certainly taking place behind the scenes as the world's top 1% brace for a major shock. But Wall Street Journal reports that it's just not gold. Cold hard cash is also leaving the bank accounts. It says that some Australians are burying it, the Swiss might be hiding it, the Germans are probably hoarding it. Indeed, while banks are printing more banknotes than ever, and these seem to be disappearing off the face of the earth, nobody knows where or why. Or as the Wall Street Journal notes, central banks don't know where they have gone or why, and are playing detective trying to crack the same mystery. We do know one thing though, of the 1.7 trillion in US dollars in cash circulation in 2018, the vast majority is offshore, where it is quickly and quietly disappearing as the world's second best physical store of value, for a total of about 900 billion in US dollars kept overseas. And it goes on to say that few are as perplexed by the fate of missing cash as the German central bank. According to the Bundesbank, more than 150 billion euros are being hoarded in Germany. And some more stunning facts, Australia's central bank says its best guess is that only around a quarter of the banknotes in circulation are used for everyday transactions, and up to 8% of cash is used in the shadow economy, tax avoidance, or illegal payments, while as much as 10% could have been lost. That is 7.6 billion Australian dollars, or $5.2 billion US, missing at the beach or in couch cushions. So what this is telling me, guys, is exactly what I've been saying would be the case. In a financial crisis, let's say we have total collapse of banking systems, you're going to see people use cash first, not gold. Again, I don't have a problem with hoarding gold or other precious metals. That's fine. You need to have a well-allocated portfolio when it comes to non-equity investments. However, in a state of crisis, even Bitcoin will not be used. It will be cold hard cash, because that is a medium of exchange that everyone can identify and relate to. If the power is out, everyone knows what a $10 bill is worth and how many goods and services it can purchase. Unfortunately, not the same thing with gold. So you'll probably be swapping your gold for goods and services at a far lower rate than what it should be. So you want to have cash, in my opinion, and that it looks like that's what the world is doing. They're hoarding gold, they're hoarding cash off the bank's balance sheets in their own personal vaults or in other vaults around the globe, cash in their own hands in vaults around the world, not in central bank vaults at all. So this is very interesting, and as Wall Street Journal concludes, around a third of New Zealand's new banknotes headed overseas in 2017, up from 6% 4 years earlier. That happened around the same time that tourism overtook dairy as the country's main export money spinner, leading officials to speculate on the role played by currency exchanges, especially in Asia. So, here's where we stand. We can conclude that more and more money is being taken out of circulation and hoarded. Gold is on a rise as far as purchases by central banks. But in addition to that, you have kind of like your second economy, or regular civilians and citizens hoarding gold as well and not keeping it in vaults. So we've got a lot of gold that is missing. In relative terms, I'm not sure year to year what the difference is, but at least from 2016, we've seen an uptick in gold disappearing, ghosting off the balance sheets of these central banks. And these are the little telltale signs that you have to pay attention to, it's kind of a collective unconscious move by everyone, because they know this game is unsustainable. So we don't know when it's going to end, but at least we know since 2016, people have started to kind of take things offline. And I think, again, Bitcoin plays a role in this. It's very portable, more portable than gold. So I can cross borders without being questioned about, why do I have $100,000 in gold in my bag, or $1 million in gold? You can't even move that much money without being suspicious, especially not on an airplane if you're flying commercial. So in my opinion, Bitcoin is a great solution as well as precious metals, but I'm more overweight Bitcoin simply because of the portability aspect of it. But this should be a telltale sign for you guys that the world is bracing for something. Definitely something is going on, and that's my 2 cents on the subject. You guys let me know yours in the comments below. If you like this video and found it informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. I'm out of here, people. Holla!